Well, when you look at the hedge fund world, they are actually the most bearish on U.S. stocks that hedge funds have been in for years. And Sam Hocking of BNP Paribas says the hedge fund managers he talks with have a wait and see attitude. They're wondering primarily what Ben Bernanke will do next. Sam deals with hedge funds in his job as global head of prime brokerage sales for BNP Paribas and joins us in the early morning from San Francisco, California. Sam, welcome back to InBusiness.
Hey, Margaret, it's good to see you. Thanks for having me on.
Well, we've been looking at this record short positions. I mean, highest level of bets against the S&P in the past 4 years by hedge funds. Is this really about, hedging out individual stocks, or is this a bet that the market's just going to go down from here?
Well, I think you're right. I mean, I think right now every hedge fund manager I talk to has really positioned themselves to be bearish. So either they're doing that through shorting the market, or they're taking their leverage way down, and so they have fully long positions on their book. And right now, I think people, what they feel is just uncertain, whether it's Bernanke, whether it's the Eurozone crisis, or they're waiting for the ECB to do something, or Germany or France. It's just everywhere you turn, there's uncertainty. And so when there's uncertainty, I think a lot of people become bearish and they want to wait it out.
And a number of hedge funds with that uncertainty are raising the amount of cash they have. I had Michael Tenenbaum, Tenenbaum Capital on the show yesterday. He said they're about 20% liquidity right now in his funds because of that uncertainty. Is that about an average allocation?
So what's happening is either people are going into cash or they take down their leverage. So I've seen kind of both. And what they do is they want to make sure that if there are redemptions or there are substantial changes in the market, that they have plenty of liquidity. So I'd say 15 to 20% cash holdings is probably about right.
Yeah, and yet you're seeing net inflows to hedge funds. Is that just people searching for, a higher level of return?
Well, look, in markets, the good thing about markets, there's people that do well and there's others that don't do as well. So we do have clients, and I know others that do well, so they are attracting capital. So, for instance, I looked at the inflows and outflows yesterday for the beginning of the month, and we're about a push. So we've got equal amount of inflows as we do outflows. So, yeah, there are people that are looking for some returns, and if you look at some of the short-only players, they are definitely getting some inflows.
And what size fund? I mean, is there sort of an average right now? Are the bigger guys getting more allocation, or is it some of the smaller funds?
Well, look, I mean, you got the mega funds that, probably haven't done as well, and so I think that capital inflows probably leveled off a little bit. I think kind of the medium and kind of the 2 to 5 is getting some inflows if they have the performance. And then people are looking at getting some alpha. These funds that are 150 to 500 million that really do drive alpha generation are attractive to people.
Now, when you say million, I mean, medium is the scale. What do you mean? Like, obviously, $1.5 billion is the big scale.
Yeah, I think, though, in our world, you kind of think of a medium-sized hedge fund in kind of the 1.5 to 5 billion. And then kind of north of 5 billion starts to get into the mega funds. And I think sub 1 billion is kind of the small to crutching up to the medium size.
Now, when you look at the world of hedge funds right now, Asian hedge funds are actually outperforming some of their American and European peers. What do you attribute that to? Is that just about allocation, or is there something more at work?
Well, look, I mean, anytime you've got the emerging markets, it's kind of a different risk-reward, paradigm. So you look at the risk and reward, and I think there's a little more risk in the kind of the Asian stocks, and but there's also some return there. So I think people are getting, those that have played it well are getting paid for that.
And where is the capital raising coming from? I mean, where are funds raising money from? Are they from some of those clients in the emerging markets, or is it money coming from home?
Well, look, this is what's so interesting about capital raising now. I think it's really a global situation. But I see some of the big money is coming from the endowments or pension funds that have been looking at funds for a long time. So it's not like they decided last month that they want to come into a fund. They might have looked at this 6 months ago, 9 months ago, and said, okay, our allocation is going to come in September, October for these size of funds. So I wouldn't say it just happened. I think this is a rebalancing that happened probably back in the end of Q1, Q2 for an allocation in Q3, into Q3, or an allocation in Q4.
All right, Sam. I know you got some upcoming trips to Europe. Wanted to check back in with you after that, get some of those insights. It's Sam Hocking, BNP Paribas Global Head of Prime Brokerage. The snapshot, what's
Thanks,
happening in the
Margaret.
world of hedge funds. Take care, Sam.